Okay, co-GP structure. This is something that is sought after by some of the most sophisticated family offices, but it's not often done because of a few different reasons. But first, let me explain what it is. It's basically when you think of a traditional GP LP structure and you think of how the GP is the one typically in control and earning the fees, and the LP is typically the one paying fees as a passive investor to get their money working for them. Well, in a co-GP structure, somebody's coming to the table and saying like, well, I'm going to provide all or half of the capital you need for this deal, or I provided you with the land to develop this real estate deal, or I'm going to provide you with all of the strategic resources and invest a good amount and help you raise the capital for it or something. So I want to be your co-GP partner, meaning I want to be part of the GP with you. And for doing X, I would like Y% of all the carry in the deal, or I would like Y% of all of the fees you bring in. And I want to be a 20% partner across the board, or a 50% co-GP partner. And we closed a couple $100 million commitment last year, which was a co-GP structure. And the family office got 50% of the carry in the deal. They took none of the management fee. And they brought in 90% of the capital in the deal, but they didn't have to run it. The manager ran it. So this is used by strong capital players, sophisticated investors who know that their capital, if they're putting enough capital and enough strategic value into something, can work harder for them if they're not only not being charged fees, but they're actually making a little bit of fees when they invest. It kind of flips the amount of returns they can get. I would be ready for this if you are a investment fund or a sponsor. If you're a private company, this part is not relevant. So we'll move on from this, pretty quickly here in a minute. But the reason why a lot of these don't happen is that the family office is highly sophisticated, who wants to do a co-GP deal. It might be great for them. For the GP LP, the value has to be enough from the family office that it's worth giving up half of the economics, or even 10% of the economics on the upside for the GP. So if all they're doing is writing a $300,000 check, they might say, no, go away. We don't need your money that bad. If you don't want to be an LP, we don't need you as part of this deal. We know we're going to raise all the capital we need, so we don't need you. Versus if someone says, we'll put $3 million in the deal and help you raise at least another $1 million from our friends and family, and you're only raising $6 million in this deal, so we know we can cover more than half of it. Could we just be a 20% co-GP partner? And here's the exact terms of what that would mean. Then they might be more likely to say yes. So GPs that are really big don't need co-GP partners in theory as often. And GPs who are really small might not have the credibility and the track record to even attract a co-GP partner. But if you can get one and go from being small to medium, or medium to large, or go from being almost non-existent, doing your first couple deals, to being more substantial and credible and get that track record and momentum going, that can mean everything in this world. It's all about momentum, trust, consistency, track record, constantly learning faster. And so this is something that can be used to gain momentum if you're having trouble getting going. And sometimes the investments raised for a co-GP, it could be an $8 million or $40 million check that comes in from a single investor. That's hard to do. It takes a lot of time, but it's definitely possible. And we know people in our club that have done that, from reaching out pretty cold to investors and just working the relationships over time. And they take 18 months or 2 years or 2.5 years to close, but a $40 million investor replaces 400 $100,000 investors. So it's worth planting those seeds while you continue to get deals done with smaller investors if you're on the capital raising side of things. And if you're a larger investor on the private investor side of things, it can be worth considering this to boost the returns for you and your family or your clients if you can find a good co-GP partner to do a deal with.